Welcome to Bloomberg West. I'm Emily Chang. Corey Johnson will join me in a minute. Over the next hour, we'll bring you the latest news and analysis from the worlds of technology, innovation, media, and entertainment. Reports of Netflix's death seem to be greatly exaggerated, and the stock is rocking in after hours. The online movie rental service says profit beat estimates, and it now has more than 20 million subscribers. We'll break down the numbers and get analysis on the future of Netflix's business in just a few minutes. And Hewlett-Packard is remaking its board in the image of CEO Leo Apotheker. We'll go inside the makeup of the new board, and we'll bring you our exclusive interview with HP Chairman Ray Lane from Davos, Switzerland. And you'd think President Obama was the chief spokesman for Bloomberg West, the president emphasizing the importance of innovation to lead the transformation of the American economy in the 21st century. Paul Saffo of Discern Investment Analytics will join us with his perspective on innovation in Silicon Valley. But first, to our lead, Netflix tops 20 million subscribers. The company reporting today profits increased 52%. The stock has been soaring, up more than 260% over the last year. Netflix 2.0 no longer rents DVDs, of course, and is now streaming only, a model that has obviously caught on in the living room. But can Netflix keep it up? With Apple TV and Amazon Video on Demand, there are a lot of big-time competitors vying to entertain you.
There's a lot of competition here. There's a lot of way for us as consumers to get access to content. To do it via a subscription model where it's unlimited streaming for a month for only $8, nobody's in the market now with that kind of price point. They may have greater selection. Apple certainly does. Amazon does. But they're not offering on a subscription basis for $8 a month. You're paying $1 to $4 for every video that you download or purchase from Apple or from Amazon.
Still, Mark Mahady of Citigroup says it will be difficult for Netflix to repeat such strong earnings growth again and again. The majority of analysts have a hold on the stock. Netflix's library also needs some beefing up, and that will cost money. Corey's been working through the report, and I guess, Corey, the big question today is, will this year be as big as last year for Netflix?
Well, how could it be? I mean, what we don't know about Netflix that we didn't know an hour ago, well, we know a lot that we didn't know a few hours ago, at least. Now, the first thing we care about with Netflix is sales. Maybe even more important than earnings at this point in the company, because the sales figures give us a clue as to how big the Netflix opportunity can be. Now, sales were strong, but they weren't as high as the street was looking for. $595 million, representing 34% annual growth, not the 35% expected. But as you mentioned, this stock is up. It's flying in after-hours trading. But let's forget about the stock for a minute and talk about what we learned just now, today, about this company. Now, the big issue for Netflix is the transition, as you mentioned, from shipping DVDs by mail to streaming movies online. Streaming movies cost the company more, and it's a worse business. But it's clearly the future for Netflix. Now, last quarter, the company said that streams outpaced shipped DVDs. They're still shipping DVDs, but streams were bigger, and that seemed to happen again this quarter. Now, the company said that Netflix, therefore, should be thought of as a streaming company. So to paraphrase the old saying, if it's a worse business, Netflix making less with every streaming sale, but hoping to make up for that with volume. Volume of what? Volume of subscribers. And that's the big news here driving the stock in after hours. In the first quarter, Netflix added 3.1 million new subscribers. The street was looking for about 2.5 million, so it's a lot better than expected, and that's probably why the stock is up so much. But what kind of subscribers were they? Remember, streaming-only subscribers pay less, just $7.99 a month. Now, in the quarter, one-third of the new subscribers were streaming only. It's about 1.3 million streaming-only subscribers. And again, streaming is more expensive than shipping by mail. Among the reasons, the source of the best Netflix streaming content is the cable channel Starz. Now, that deal expires in Q1 2012. The company said it wouldn't talk about the Starz negotiations, leaving investors in the dark. Now, because the company didn't acquire a new deal for streaming, costs were down, profits were up. But until Netflix finds a longer-term source of movies to stream, Netflix doubters and Netflix short sellers are sure to linger. Emily?
Corey, I feel like we asked the same question last time Netflix reported, can it keep it up? And indeed it did. I mean, who's to say that next quarter it's not going to be even better?
Well, I mean, the subscriber addition is great, but if the subscribers are not as profitable, at some point this stock is not going to keep flying, and the company might do well, but this stock might reset itself to the levels the company is showing us in terms of growth and profitability.
All right, thanks, Corey. Now for some insights and perspective on Netflix's business model and how it's changing from being a mail-order DVD company into one of the leading video streaming companies in the world. We're joined by Rob Rader. He's a partner at the entertainment law firm Todd Ferentz, Schwartz and Rimberg. He joins us now from Los Angeles. Todd, thanks so much for joining us. Rob, thanks so much for joining us. You know, I'll ask you the big question. Do you think Netflix can keep it up?
In the short run, they definitely can keep it up. The content is out there for them to acquire. It's going to be more expensive, but they've got a lot of momentum. And as they point out in their report, they've got two things going for them. One, they're in that growth phase. There's still a lot of people that aren't subscribers and that haven't tried Netflix. So they've got a nice pool to still continue adding large numbers of subscribers. So that's going to continue. That growth is going to continue. And number two is, frankly, they are a really very well-run company. So a lot of their execution is top-notch. So with the fact that they execute well and the fact that they still have additional subscribers that they haven't tapped into. As they point out, their marketing costs were less this quarter. There's still room for growth, but I think 6 months, 12 months out is when you expect it to start slowing a little bit.
Now, one of the biggest weaknesses about Netflix is its selection. I mean, how does Netflix go about beefing up its selection, and how much is this really going to cost them?
It's going to cost them hundreds of millions of dollars more. I mean, it's interesting that they're already experiencing higher costs for fulfilling a streaming order rather than a DVD order, because normally one expects that to be the opposite. But they've flipped that over, and as their costs of acquiring content, of licensing content from either studios or, in the case of Starz, another aggregator.
And for re-election, HP changed its bylaws, expanded the board from 12 to 17, and named 5 new independent directors. Now, at Bloomberg News, we had a chance to look at just who these independent directors are and just how independent they are. And you guessed it, independent they're not. Although they seem to have all 5 seem to have business ties to HP CEO Leo Apotheker, and the corporate governance types are concerned. So that should worry all of us, since HP is among the Dow 30, a quarter of the S&P 500 computer index, and a linchpin of the technology economy. So look at what new board member Meg Whitman as an example. Failed gubernatorial candidate, new HP board member. Well, it turns out when Whitman was CEO of eBay, eBay did a big deal with SAP, which was run by Leo Apotheker. New independent director Pat Russo. When she ran Paris-based Alcatel-Lucent, she did a big deal with SAP while Apotheker was running SAP and living in Paris. The list goes on. Dominique Serculier runs AXA Private Equity. Apotheker sits on AXA's supervisory board. GE's Gary Renier did business with SAP under Apotheker. Booz & Company, formerly Booz Allen, Shumeet Banjari runs Booz's European operations, which does business with SAP, Apotheker's old company. The bottom line is that these independent directors don't seem to have complete independence from HP's new CEO. Now, their behavior will be the ultimate judge of their true independence. We're going to see just how that plays out during their time on the HP board. Emily?
Thanks, Corey. Well, with Leo's team now on the inside, some corporate governance experts say these connections could spell trouble for shareholders. But HP Chairman Ray Lane begs to differ. In an exclusive interview with Bloomberg Television, Lane offered our Eric Schatzker at the World Economic Forum in Davos his perspective on the post-Mark Hurd HP.
It'd be hard for Leo or myself, as long as we've been in the industry, to not have relationships with a lot of people that are in this industry that could help HP. So it's natural that Meg Whitman or Gary Reiner at GE or Pat Russo would have connections to both Leo and myself. But they are not so close that they would corrupt independence at all. And I've been pretty cognizant of that.
How is this newly constituted board going to be different from the old board? What do you want it to do differently? How is it going to represent a break with the past?
Well, I think it's a refreshing of the board.